Item 10C, receive quarterly financial update report as of March 31st, 2013 for the 2012-13 General Fund, Enterprise Fund, and Internal Service Funds operating budget.
Good evening, Honorable Mayor, members of the City Council. I'm here this evening to present the third quarter financial update report. And I'd like to begin by starting with the general fund and just reviewing many of the trends that have been previously discussed with the prior mid-year financial update report. Starting with sales tax, we are continuing to see sales tax trending at about the 60% of budget for as of the end of the third quarter, which is on pace with where it was last year. However, the budget over last year was increased, so overall sales tax is increasing over where we were last year. Similarly with property tax, as you can see, is trending at 66% of budget this year, whereas it was at 62% of budget last year. Much of this is due in part to the loss of redevelopment and the city now receiving property tax as a result of that dissolution of those tax increment funds now coming to the city as property tax. So that is the explanation for why property tax is really trending higher. We are starting to see assessed values pick up slightly, but it's still very slow moving. Another notable revenue that I'd like to call to your attention is also hotel motel occupancy tax, or TOT, continuing to trend very strongly. We're at 75% of the budget as of the end of the third quarter. Do keep in mind that TOT tracks 1 month behind, so rather than it representing a 9-month, we're actually representing 8 months of the fiscal year because they tend to track 1 month after. So we are trending well in many of our revenues, and if you look at sales tax, property tax, and TOT as a whole and compare it to where we were last year, you do see that revenues are high. Those three together are about $1 million higher than they were last year. So I say that because it's hard to explain why those look so good and why I'm not sitting here saying that things are fabulous. And the counter to that is really, again, I sound like a broken record of the loss of redevelopment. And I just keep reiterating that impact because the charges for services, these are allocations that we used to recover from the redevelopment agency, as well as our use of money and property. This is an interest payment that the city used to receive from the redevelopment agency on some outstanding loans and advances between the city and the agency. Those revenues are no longer being received. And so what we're seeing as an uptick in some of these other revenue categories is really offsetting the loss that we experienced from redevelopment last year. So we're keeping pace, but it could be better had it not been for that. Going into the expenditures, and I apologize, the individual percentages for the departments are not calculating correctly. So the bottom line, 74% is accurate, and if you look at the handout that went in the packet, that represents the actual percentages to date. So on the expenditure side, we're seeing that most department expenditures are trending within the 75% range, which is where we would expect to see them at this point in the year. One exception that we're noting is recreation has slightly higher expenditures at this point in the year as compared to last year. They're at 85% of their budget, and much of that is due to some of the after-school programs and ACES programs that the department is offering. And you will see, if you look at the revenue side, that those increase in expenditures is being offset by increased revenues as well. So that's some of the explanation for that recreation. Otherwise, across the board, we're seeing that expenditures are tracking on budget for the general fund. On the enterprise funds, starting with the cable fund, we're continuing to see some decline and drop off on cable revenues, and those revenues, while they're declining, we're also seeing a decrease on the expenditure side for cable. So overall, we're still seeing revenues over expenditures, a positive cash flow on an annual basis for the cable fund when looking at those numbers. On the wastewater fund, revenues are tracking where they should be at about 75% of budget at this point in the year, and that budget for the year does take into account the rate increase that was approved back last summer. On the expenditure side, the 54%, it looks a little off, and the explanation for that is really just a timing delay. We pay quarterly payments to the city of South San Francisco for the wastewater treatment plant, and those payments are sizable, in excess of $700,000. At this point last year, we had paid 3. This year, we've only paid 2 of those. So the drop-off is one that we will make up just as time moves forward. On the water fund, we are seeing the revenues trending slightly above budget, 79%, and you know that this year has been a dry year, so I think we're seeing consumption slightly higher than what we would have anticipated, just as a result of the winter months being slightly drier than they have been. And on the expenditure side, again, trending as we expected at 75%. And finally, on stormwater, revenues at 65%. Again, stormwater revenues are collected on the property tax bill, and we've received one installment. We'll receive the second this month, so it's not reflected there. So we do anticipate that those will meet the budget. And nothing notable on the expenditure sides, trending slightly below budget at this point in time. So that concludes my overview. I'm happy to answer any questions.
Any questions, Kim? Rico?
Through the chair. Just you kind of touched on them already, so thank you. I was wondering under the expenditure category if we are, at least for myself, I would appreciate under the general administration we have a lot of areas from the electeds and other departments as a collective. Can we have them itemized and broken down each department as far as where the expenditures are? And then on the cable, you've already touched bases on that. And maybe we can come back at the budget study session, as I had mentioned before, to have a kind of where we're at, the assets, the value, our plan for the future, because that is down somewhat, or not somewhat, it is down. So I'd like to have us keep an eye on that. And then you already mentioned about, again, beat me to the punch, the recreation, senior services, and parks, that is higher, and I'd like to just have that evaluated too at the budget time.
Ken?
Kim, regardless of all those figures and everything, it seemed like sales tax might have been. I guess the impression is that sales tax would be trending better. What's your opinion of that? I mean, it's a little better percentage point from last year. I would have thought that would have been higher, judging from the way everyone's saying, things are good.
So sales tax is trending higher. Keep in mind that the budget, we actually increased the budget this year during the mid-year financial review. We increased the budget $150,000 to the 6.85. So that is an increase over what we originally budgeted, and they are tracking about 5% above budget at this point in time. So we are seeing an increase, and I think as compared to last year, I think because we started to see much of the uptick during the latter part of last fiscal year, comparatively, we're probably not seeing as much as maybe some cities that where the recovery started a little bit later. Ours started slightly earlier. So I think that might be some of the explanation. But I would say overall, sales tax is still trending and going very strong.
Okay, good. Thank you.
Anything else? All right. Thank you very much, Kim.